And welcome, it's Mary Ellen McGonagle here with your weekly Edge show for February 10th, 2023. Let's take a look at the markets, and I'll also share with you what I will be viewing this week. First up, we are again going to take a look at those current markets and see where did we close the week. It was a rather bumpy ride. We're going to take a look at support, resistance, what we can anticipate going forward. Also, some of the headline news that drove price action, not a whole lot of heavy-duty economic data, so there were other drivers that kind of pushed these markets around last week. Also, viewer question of the week, and it's all about what is holding the Dow Jones Industrial Average up. We did see a pullback in the other two indices, but the Dow was flat for the week, so we will get into that. Some highly relevant names in that index that are helping buoy that particular area. So first up, as it relates to data and news last week, on Monday, we did see consumer credit drop to levels that were not seen 2 years ago was the last time. So we did see quite a drop in that consumer credit area. That is one of several reasons that we saw a pretty sharp pullback in retail stocks, and we'll get into that as we move forward. Now, the bigger mover last week were comments from Federal Reserve officials. And with that, we did see riskier areas pull back. Those comments were rather mixed. Fed Chair Powell came out earlier in the week and reiterated his sense that deflation was beginning to take shape, and that helped buoy the markets earlier in the week. Subsequent to that, we did see two other Federal Reserve officials talk about the need for elevated interest rates beyond this year, which brought out recession fears. So rather mixed, again, all amidst a lack of economic data. So there was quite a bit more in the way of attention that was being paid to that. Earnings season also in full throttle, however, very, very mixed upon that landscape as well, which again had investors retreating. We will get into that more as we move on. From here, we did see weekly unemployment claims climb and consumer sentiment hit a 13-month high. So again, a lot in the way of mixed data coming our way, and the broader markets investors are not comfortable in periods of uncertainty. We like to see firmer footing beneath us before we put more money to work. Next week, pretty impactful, that January core consumer price index. That's a highly relevant inflationary metric that will be released later in the week, closely watched. Also, we will see retail sales as well as the producer price index, another inflation report, due next week. So a lot of relevant data there as it relates to the markets and interest rates. So from here, let's go ahead and take a look at the broader markets and see where did we close the week. And here we are with a daily view of the S&P 500 index. A couple of things of note here is the fact that our outside momentum indicators are positive. That RSI relative strength is still up here above 50. Stochastics also in positive territory. However, both are heading a little bit lower, so we will need to keep a very close eye on those momentum indicators as we move forward. But even more relevant, we can zoom in here and take a look at where we closed for the week. And we did have a pretty sharp pullback on Thursday that pushed the S&P 500 below a pretty critical level, and that's that 4,100, very closely watched. Unfortunately, today we were not able to close back above it. We closed at 4,090.5. So textbook tells us that 2 days below a key area of potential support does qualify as a break below support. So we will be certainly keeping a close eye on that. Ideally, we do want the S&P 500 to get back up above that 4,100 level so that it can then partake in a potential continuation rally. From here, next area of support is going to be this purple 21-day simple moving average 4050. So we will be keeping a close eye on that. the next area of upside resistance beyond 4,100 is this 21-day simple moving average, which is very close. It's at 4109. So we are in a fairly critical area relative to the broader markets. Next week's price action in the face of pretty critical data could be very, very telling. Also, taking a look at those high volume metrics that took place during last week's rally, which was really constructive. The good news is this week we did see a bit of a subsiding in the volume on the selling, but however, it is definitely, we're in a rather ominous period here as it relates to the forward-looking possibility for the S&P 500. From here, I'm going to take us over and we can take a quick peek here at the NASDAQ. That particular index had been outperforming the S&P 500 over the past several weeks. However, it did pull back more than the S&P this week, down 2.5%. The NASDAQ did break below this 10-day simple moving average on Thursday, and that is not great news. This had been a key area of support during this rally this year that had been taking place. We can also see the outside momentum trending downward. This is your RSI. It's up here at 50, but we are going to keep very close attention to that. Also, your stochastics up above 50 and trending downward as well. So the NASDAQ currently in another key index that's in a key area. We will want to see it get back up above that 10-day simple moving average to give confidence that we could trend higher. That's your next area of upside resistance as it relates to support. This 21-day at 11509 is your next area of possible support. So from here, we're going to take a look behind the curtain, take a look at these 11 ETFs within the S&P 500. These sectors are going to be very telling as it relates to where that relative outperformance is shaping up or taking place. So a 2-month daily price chart view of these 11 sectors, and we can see technology still up here at the forefront. Technology sector was down 1%. That's less than the NASDAQ and also less than the S&P. So we are certainly holding in. We can see that XLK did break below that 10-day simple moving average, but has been able to close above it at 140. So good news. Good to see technology still in a nice confirmed uptrend. As we move forward, I did want to share this view of the financials, which are also holding in really quite well. This is despite a pullback in bank stocks. There are other areas among financials that are really helping to support this group, and that would be insurance and investment brokerage firms, as well as major bank stocks. Moving forward here, as we take a look at consumer discretionary, this particular group did underperform. It was down over 2%. And we can see, however, it had been a big outperformer to the upside. This pullback was despite a gain of 3.5% in heavyweight Tesla. Of course, that was offset by a 5.6% loss in Amazon. And both of those names account for a big percent of consumer discretionary. I'm going to share with you another area as well. But of note is the fact that it did have an explosive move to the upside. XLY did get overbought. So this pullback is certainly expected. We'll keep an eye on that area because we want to see growth stocks reignite and get back into a nice uptrend. Here's a view of the top performer last week, and that is energy, up 5%, with 4% of that taking place on Friday today. So we can see this index is back in a confirmed uptrend, nice high volume, and your RSI, your momentum, now in positive territory. We'll share with you some of the dynamics within energy as we move forward as well. Down here in the weaker quartile are your healthcare, staples, and utilities, your more defensive areas. We did see bright spots today here and earlier in the week, but they are still overall languishing. So let's move forward and take a look beyond those sectors and drill down even further. I use these highly relevant ETFs here again with that RSI and then in descending order, a 2-month daily price chart view. So up here in the forefront, take a look. The yield on that 10-year Treasury and the US dollar, both up here at the forefront, and they are both very impactful areas of the market. We can see here this uptick in the yield on the 10-year now up here at 3.75. Rising interest rates are not good for growth stocks. However, they are good for energy. So you can see that impact that this rise in rates can have. So this is something certainly I and many investors are keeping a super close eye on. And here we can see the US dollar in the throes of reversing its downtrend. And it is now up above this 50-day simple moving average. It was up about 1% this week, but we can see those momentum indicators up here in positive territory. I'll share with you one area that is being potentially impacted by that rise in the US dollar. So as we move forward, semiconductors still up here at the forefront. They were down 2%, less than the NASDAQ. And we can see that upon this pullback today, buyers did come in on that pullback. We've seen generally good earnings results from a lot of these semiconductor companies, primarily due to their management's outlook of growth going forward that has helped buoy these stocks. Of note last week is this black line potentially crossing down below this red. That is not a sell signal, but quite simply, it could signal a period of consolidation very similar to this December period here. So keeping a close eye on that. As we move forward, let's take a look at some of these other areas. I mentioned consumer discretionary pulling back this week, and here we are with the S&P 500 retail ETF, and that was down quite a bit last week, 6.4%, but we can see it had a big upside move, got into an overbought position. So critical to see if we can hold support here at this 50 with that RSI, as retailers did in fact struggle last week. Some other highly relevant areas to keep an eye out on are volatility. We can see that it did break above this 50-day simple moving average on today's pullback. Now we are closing the week at about 20.5, certainly more elevated than it has been. Rising volatility is not good for the markets, so keep a close eye on that. It's also known as the fear index, of course. I'm going to share with you a view here of Brent crude pricing. It is up here at about 84. This is one of the drivers within the energy sector, which I mentioned was up 5%, that rise in the price for crude oil. And then that dollar, we talked about the rise in the dollar. Oftentimes you will see gold stocks decline and other commodity areas in the face of a rising dollar. So one last area that we can take a look at here are biotech stocks, IBB, and that was down 3%. And biotech names are generally riskier. A lot of these companies do not have earnings. So when we see a pullback in biotech, oftentimes it is quite a gauge of investor sentiment. It is indicating a risk-off sentiment. One other area that pulled back sharply last week that is riskier is the Russell 2000 index. It was down 3.5% as well. So again, that sense that appetite for these riskier assets did deteriorate last week. So it's something to keep a very close eye on moving forward. So from here, I talked about the Dow Jones Industrial Average. It was flat for the week in the face of the other broader indexes pulling back. So what I did want to do is share with you a view of the underlying stocks within the Dow and really take a look at what is supporting this particular index here of late. Now, it did not have an explosive move similar to the NASDAQ or the S&P in January. It really just held firm, but we are seeing a continuation of that generally flat in the face of a pullback elsewhere. So I did want to share with you some of the outperformers that are helping buoy this Dow index. First up is American Express. They had this gap up on earnings into a super nice continuation rally. You can see it is overbought at this point in time, but quite constructive. And then also, I do have that relative strength indicator. So the stocks that are up here in the forefront are your relative outperformers within the Dow index. And I did want to share with you that Apple and Microsoft are both up here at the forefront. We can see this nice reversal here. Apple did report their earnings last week. The stock was down 1.4%. Finding support here at that upward trending 10-day simple moving average. Good news for that stock. Microsoft a little more wobbly in their performance last week, but it did shoot up to a near-term high in price and pulled back. It was actually up 1.8% for the week. So those are your two stronger. Certainly Tesla, but it is not in this particular index, is the third strongest among those mega cap names. Financials, I talked about the nice performance and the strength in some of these bigger banking names. This is Goldman Sachs, also have reported earnings holding in really quite well with positive outside momentum indicators. From here, I did want to share with you another mega cap bank stock that is holding in remarkably well. This is JP Morgan. They also have Chase, which is a big credit card provider as well. And we can see that it is holding in really quite well. Very constructive when we like to see these bank stocks perform nicely. Last up, I will share with you areas that are beginning to potentially reverse their downtrend. And we've seen this last week among several mega cap pharmaceutical stocks. This is Merck. You can see that last week it was in the throes of reversing its downtrend. But take a look, that RSI now is in positive territory. And we have that nice black line up through the red crossover. And that indicates that this downtrend has been reversed. I will need to see a break above that 50-day, but very encouraging price action with Merck and several other high-grade pharmaceutical companies. Another stock on the move, potentially trying to reverse its downtrend, is Walmart. Nice double bottom formation, and we did see the stock, the RSI, close in positive territory. Not so with the momentum on that MACD quite yet, but certainly of note. So I will leave it at that. Everyone have a fantastic weekend. If you haven't already, please use that link below. You can trial my MEM Edge report for 4 weeks for a nominal fee. I dig even further into this sector potential rotation taking shape, and we can also share with you my suggested holdings list that has been a real outperformer. Take care. I'll see you here next Friday. Hey, Mary Ellen here with Simpler Trading. Thanks for watching the video. If you liked what you saw, go ahead and hit that like button and leave comments below. And if you'd like to be notified to future videos, you can hit that bell icon and subscribe. Don't leave without subscribing to my MEM Edge bi-weekly report. I do have a special trial offer. And for those who'd like to learn about trading live with us, you can go ahead to simplertrading.com to learn more.